Happy Friday, it's Mark from Caliber Home Loans. I hope you guys had a great week. It should be a pretty nice weekend, a little warm, but hey, it's summer and it's July and it's Michigan. So I'm all in as long as it's not 40 degrees and raining. So hopefully for the open houses, we'll get a lot of traffic for the open houses this weekend. So let's go through the market real quick. So this is what you're looking at is today, and we're going to end up pretty close to where we started, so there isn't too much to talk about as far as changes in rate for the week. We actually, again, we're almost dead on from where we started, so rates pretty much maintained for the week. We had a little bit of a gyration on Thursday, but it all evened out. And then over the last month, again, we're still, the price is still going up a little, so remember the price and the rate move in opposite directions. So as the price of the bonds go up, the rates go down, and vice versa. And then from the beginning of the year, we're still in this upward trajectory in price, which means that rates are still lower than they were at the beginning of the year. So rates have not moved much at all in the last week or two. So it's still a great time to buy. There's a lot of refis out there, so if you have clients or if you know someone that, even if they bought just a couple of years ago, especially if they're in an FHA loan, between what they paid down and what the house appreciated at, it might be a great opportunity for them to get out of to refinance into a conventional loan and get out of the mortgage insurance. So that might be an idea for you to reach out to your past clients. So let's talk about next week. Next week is going to be a big week for the bond markets, for all the markets really, but for the bond markets. So we've got the core inflation numbers are coming out on Tuesday. And if the inflation rates are higher than what is expected, that's bad for bonds. So rates would go up a little bit. So, and then the ADP employment numbers come out on Wednesday morning at 8:30. And again, so if the ADP employment numbers are stronger than expected, that's inflationary, and it's bad for bonds. If they come in weaker, it's actually good for bonds. Remember, good news on Main Street is bad news for bonds, bad news for rates, or vice versa. So the employment cost index comes out on Wednesday morning also, which is a big deal. That tells us if people are getting raises and how much money is being paid out. And then the big deal of the week is Wednesday at about 2:15, the Fed adjourns. We expect them to drop rates a quarter point. So there's been some talk that the expectation originally was a half a point, and now the markets are kind of gyrating a little bit because as of today they think maybe it's only going to be a quarter point. But don't expect mortgage rates to drop a quarter point. Typically what happens when the Fed drops rates, when it's expected, is that the initial knee-jerk response is that the mortgage rate may go up a little bit, at least for a short period of time, and then come back down. So we'll have to see exactly what the Fed decides and how much they're going to drop their rate. Remember, the Fed funds rate is not a mortgage rate. It's a very short-term rate that the banks use to lend to each other. And then the employment number on Friday comes out, which is always a big deal also. So again, if the employment numbers are higher than expected, that's inflationary. That causes rates to go up and vice versa. So next week is a big deal. So anybody that's on the fence and is in the process of signing a contract, getting their mortgage application, it's important that their loan officer keeps an eye on the markets and what's going on so they can react quickly if the client decides to float and not lock in. That way, the loan officer has an opportunity to lock them in at a rate if they think that the rates are going to go up. So, having said that, have a great weekend. If anybody needs anything, any pre-approvals, I'll be around, 248-705-8431. And just have a really good weekend and have fun. Thanks a lot. Have a great day. Bye-bye.